Okay, hello everyone. I'm going to go through a uh, very quick price ladder analysis in the Bund futures. So, Bund futures. I was looking into doing a actually Euro Stocks 50 one. Unfortunately, we've had some technical issues with that. So, to those of you that have requested a few Euro Stocks futures ones, I will try and get that for next week. But for this week, I'm going to go through a quick Bund futures, and this is actually we're going to take a look at an open that we had here on the 13th of November. So the market had basically opened up outside of value. So what we're going to be looking at is a market that opened outside of value. This is an open outside of value. We just want to take a look at the price action after the open and how we can react to it. Obviously, we have to keep in mind that this is outside of cash hours. So this is futures only session. And in saying that, you have to be aware that the average clip size is probably smaller, the liquidity is a lot less. So what you're expecting from the market changes a little bit in terms of the price action and what you're seeing on the order book. So what I'm just going to cover is basically, as the market opens, what can we look for and how do we kind of trade off it, and if there's any sort of very short-term scalp opportunities that we can take advantage of. There's one thing I just wanted to take note of. The one thing on the ladder is on the volume profile. So if we just open up a little pen here, so I can just annotate for you guys. So on the volume profile that you normally get over here, let me do that in a different color. This is your volume profile usually you get at each price. For some reason on this replay software we're not able to get the exact amount. So on the open usually you'll probably won't even see what's traded even if it blips. And usually when the market opens up outside of value you get a sort of blip. So what I want to make clear is the volume profile is not accurate. Okay, let's just take a quick look at this and see what we can kind of ascertain from it. Just bear with me while I load this little bad boy up. This is pre-market now. The market's in a bit of an auction phase at the minute. We're going to see, hopefully, at some point, the market should be opening up. We should be getting some sort of white box, which we're not getting at the minute. But I believe we're opening up around 30. So as soon as the market opens, we want to stay very vigilant to see what the price action is like once it gets. So we get the white box at 29s. So the auction process opens straight away, blips up. We want to sell straight at that price. Now the reason being, the market's blipped up and it's caught some positions off sides, blipped. It's outside of value, and then you get right down to the starting price again. When you get back to that starting price straight away, you want to interact straight. And obviously, you can trade this differently. Unfortunately, on this replay software, I wouldn't be able to get filled. As you can see, nothing's traded up here, but in actual terms, it actually has traded up there. So let's look at what's happened, because we've just blipped down. We're seeing a bit of order flow come into the market. Some bigger size at 21s, 31s, the 300 lots is coming into market there, trying to get filled. We've traded at 17s. He's still there, but another 100 lots trying to take the market offered at 17s. Hasn't held it as of yet. And we're seeing a bit of bigger bids come into the market. You see that 60 lots just traded into 19s there. Couldn't take it offered. And a 60 lot in this kind of thin liquidity is actually pretty decent size. So it's almost like 150 lot or 200 lots. So someone's actually reloaded at 19s. We want to actually start thinking about taking a little bit of size off here, because we might start getting a little bit of a bounce in this area, which we are getting at the minute. Let's see if we can try and get filled. Obviously, we've given up some of our profit, but at the same token, you don't want to sit back while the market's kind of rallying back in your face. So we'll actually take out some at 25s. As you can see, the market's kind of coming back, reloading here at 26 a little bit. So that gives us a little bit more comfort that we might actually come down a little bit further. And we're going to try and stick our bids in just ahead of this high volume node at 20s. Reason being, obviously, in this area. We've shown proclivity to trade there, so we want to make sure we can get filled just ahead of that high volume. We haven't traded it out just yet, so we're a little bit unlucky on that little fill there. So we might actually try and take this a little bit higher again over here at 23s, see if we can just get a quick cheeky fill, which we've just about gotten at 23s. Now to say, obviously, we've taken from 30s to 25s on 5 lots, and then 30 to 23s on the next 5 lots. Yes, we have missed out on the potential ticks from 25 to 17s, and you could have said, okay, that's not perfect execution. On the same token, you could also say there wasn't any reason up until we started seeing some bigger bids come into the market around 19s and 20s for me to actually get out just ahead of 17s. Now, at 17s, if you notice when we actually came down, and traded the low here at 17s, we actually went offered the price. So, if we just put that in a different color, the market actually went offered here. It's a really bad drawing. So we actually went offered at this price in here. So we had some offers stacked up in here. And I think we went offered with about 47 lots or something from my memory. We had gone offered this price, and then it just flicked back up. So what you'll see often, and what I want to make a point of saying, is in these kind of market environments where it's very thin and it's pre-cash, the algorithms actually have an ability to take the market bid or offered at the high or the low, which is extremely tricky and something that you have to be able to adapt to, because when you see a market go offered, you don't necessarily feel as if that market should leave the low at that price. You feel as if someone's going to just come in and downtick 16s. Why would I want to get out at 17s? If anything, if you see the market actually go offered, which I think we just went offered there briefly at 17s again, it's a kind of trick of the eye. You almost feel as if, okay, the next price is going to trade at 16s. I'm not going to get out 17s, and they flick it back up at 17s. So they basically flick it back up. This guy vanishes, and we go bid at 17s, and then someone else goes bid at 18s and 19s really quickly. And all of a sudden, anyone that sold it in this area is now feeling kind of trapped, and you get that quick bid up. Now, I could have probably reacted a little quicker when I saw that, when I saw the big bids like you saw come in at 18s, 19s, and 20s, and probably hit 21s. I was slow to get out at 25s, but nonetheless, from a trade setup perspective, what we're actually looking for. Now, you can trade this in 2 ways. Remember, there is the opening price. So you get the opening price, you get the quick flick up, and then the market kind of just slowly trades lower and lower until it finds a sort of buying area or somewhere where it can auction off higher again. But this is common that you see when the market opens outside of a value area of the previous day. Obviously, you can trade it in a way where the market blips up, comes back to that price, and then you start interacting here with your stop essentially above here. So you sell here, your stop loss above there. That's potentially a way to play it. There are traders, obviously, that trade it differently. You could also, unfortunately, I can't show this on the replay software because it won't register it, but you can actually buy the opening auction just before it opens, place your buy orders as high as possible so that you make sure you get filled, and then just offer the market on the way up so you can get out and potentially cut in reverse. So you're basically buying here, covering some of your position here, and then potentially selling here. Obviously, you have to be very, very quick. Your eye has to be super quick to spot if you're actually wrong or not, and understand if it gets to a certain price, you need to be out. So you got to tell yourself 3 or 4 or 5 ticks to the upside, I'm out above this. Usually 3 or 4 or 5 ticks is not going to do it. It's more like 10 ticks, 15 ticks, because the blips can be huge. And then if anything, actually, most traders actually offer a little bit more up that high. But if you want to be a disciplined trader, I wouldn't say getting too crazy with that. But in most cases, when the market opens outside of value and you get these blips, it's just usually people having to stop out. So you're always getting these really quick reactions, and just take a mental note of what that price action looks like. If you play it again, you can't see it very clearly now, but next time the market opens, look at how it reacts. It's a very quick reaction. It's up, down, but immediately. You can barely catch it with your eye. So you can think about ways you can trade this, guys. There's loads of different ways, and a lot of traders are extremely profitable with just trading the opening prints. So hopefully you guys saw a little bit of there. I mean, there wasn't much price action to show you guys. Obviously, in a pre-cash session, it's extremely low liquidity compared to what you're seeing in other hours. But nonetheless, I think there's definitely trades to be had in these kind of sessions. So do keep your eye on it going forward. Anyway, thanks a lot for listening, and stay tuned, guys. Bye bye.